I think most people are going to misunderstand the Des Moines housing market in 2026, and that misunderstanding is going to cost them a lot of cashish, a lot of money. The issue isn't bad information, it's applying a national prediction to a very local market. Hi, I'm Pete Jones, I'm a local realtor, and here's how the 2026 housing forecasts actually translate to Des Moines. If you've read the recent 2026 housing market forecast on sites like Redfin, Realtor.com, Zillow, all the national publications, the message is pretty consistent. They're predicting mortgage rates easing, affordability slowing, and a more balanced market nationally. And honestly, I don't disagree with these forecasts, but those predictions are based on national averages, national numbers, which include high-cost metros, investor-heavy markets that are very different dynamics than what we see here. Des Moines doesn't move on national headlines, it moves on local data, local lenders, and local inventory. That's where the story changes. So mortgage rates nationally are hovering between the mid to low 6%. But here's what most headlines are missing. In Des Moines, local lenders are already quoting rates under 6%. That goes as far back as Q4 2025. That's a big deal because when rates drop nationally, Des Moines often feels that impact earlier. Our buyers are payment driven, not speculation driven. So when rates move even slightly, confidence returns quickly. That's why I expect buyer activity in 2026 to be stronger locally than people relying on those national forecasts expect. This is the most misunderstood part of the market. In Q4 2025, Des Moines inventory reached 12-year highs. We had over, at times, 4,500 homes on the market. That matters because inventory doesn't just reset January 1st. What we saw at the end of 2025 is setting the tone for early 2026. And that tells me we're not headed into another extreme shortage market. Instead, we're entering into a healthier phase. There's more choices for buyers, there's more competition between sellers, and smarter pricing strategies win. It's not a weakness, it's a balance. Those national publications I mentioned previously, Redfin, Realtor.com, Zillow, they're all projecting slower price growth nationally in 2026. Some people hear that and they absolutely panic. But in Des Moines, slower growth is not a warning sign. We never experience those extreme spikes like on the coast, which means we don't need extreme corrections. What I expect is steady, predictable appreciation. Homeowners will continue to build equity. Buyers will avoid sudden price jumps and the market will stay accessible, which is healthy for the long term. Here's the takeaway. The national forecasts aren't wrong. They're just incomplete. The mistake people make is assuming Des Moines behaves just like those national numbers. If you're thinking about buying or selling in 2026, don't wait for the headlines nationally to tell you it's safe. Understand what's happening locally. If you want to talk through what that looks like in this market for you, just reach out. Because in Des Moines, context beats prediction every time.